Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing two SoFi Technologies stock articles. In the first one, it's titled, "This Analyst is Wrong About SoFi, Here's Why." So we're going to be rebutting an analyst in this video, like we normally do, and then next we're going to go over an article titled, "SoFi Stock Doubled in 2023, Can It Do It Again in 2024?" So if you want more videos on SoFi Technologies, go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with that being said, let's get right into today's stories. SoFi Technologies, as you already know, is a fintech company or a financial technology company that essentially operates as a digital bank. And shares of SoFi, ticker symbol SOFI, ticker name SoFi, started out 2024 pretty rough, falling by around 16% in their share price. The reason for this descent in their share price was due to a KBW analyst downgrading shares of this company. Not only did he downgrade the rating, but he also downgraded his price target for this company. He started off by reducing his rating to where SoFi was originally a market perform stock, and then he rated it as an underperform stock, which was not very good for investors. He then followed it up with lowering his price target from $7.50 down to $6.50. Now, to be fair to this analyst, before we absolutely destroy his logic, is that SoFi did recently double over the last year, including more than a 40% surge in their share price after their third quarter results. So it is hard to blame some Wall Street analysts that are taking more of a cautious stance in regards to this company. However, I think this analyst is clearly wrong, and we're going to get into exactly why I think that in this video. SoFi Technologies currently trades at $7.98 per share, while very bullish analysts believe it could surge up to $12 over the next 12 months. We also got a recent price target from a BMO analyst who believes SoFi could reach $9 in 2024. To quote straight from the KBW analyst, he says, "SoFi's shares remain polarizing, but noise aside, anytime a growth stock is trading at premium valuations with 15 to 20% downside potential to consensus EBITDA, we believe a more cautious stance is appropriate," end quote. So I understand I too am a cautious, risk-averse investor. However, to say that they have 15 to 20% downside just really doesn't make a lot of sense to me. I typically have no problem taking a more cautious stance in regards to investing into stocks, especially if they trade at a premium, considering the quality over the quantity. And this is very true when we're analyzing fundamentals of the underlying business and the merits themselves. However, this KBW analyst is worried that the market is expecting as much as 6 cuts to the federal funds rate in 2024. Now, let me push back a little bit. I think more realistically, we're probably only going to receive maybe 3 to 4 rate cuts in regards to interest rates during this time. And the reason for this is that the Federal Reserve doesn't want to lower interest rates too quickly because that could have a slingshot effect, which would be bad for the economy. So when we look at SoFi's earnings and revenue, which could take a hit due to the company's fair value accounting methods, let's actually determine what this company should be trading at and whether or not this analyst has any merit to his price targets and price stock ratings. Let's start off talking about a significant portion of SoFi's business, which is their lending business. And SoFi makes money from lending in 2 main ways. Either they hold these loans on their balance sheet to maximize interest income, because remember, when somebody takes out a loan, they have to pay interest on that loan, and that interest goes to SoFi as a part of their profit. Or on the other hand, you see securitization or reselling of these loans to other companies. And those are the 2 ways in which SoFi's lending business makes them money. However, the problem here is that the market-to-market value of those loans could be reduced as borrowing costs begin to decline. Meaning that as interest rates decline over time, these loans will become less valuable. And they would become less valuable for 2 reasons. The first way they're going to become less valuable is that with a lower interest rate, it means that SoFi's margin and how much profit they're making from these loans will also decrease with that decline in the interest rate. Because remember, the higher the interest rate, the more money SoFi is going to make. However, for me personally, I think that lower interest rates clearly are going to lower the amount of margin that SoFi can accumulate from on these loans, but it's also going to increase the number of people wanting loans. And I think these things are going to offset each other. And another reason why this would decline the market value of these loans is that when SoFi tries to sell these loans to other companies, the other companies may not want to buy it at the current interest rate. But let's get back to the analyst. The KBW analyst estimates that for every quarter point reduction in interest rates, that SoFi's fair market value for the loans held on their portfolio and their balance sheet will roughly decline by $50 million in revenue. However, I personally, and the author of this article, see the exact opposite happening, and here's why. If the Federal Reserve decreases the interest rates on loans, again, that means more people are going to want to take out loans, which is going to be great for SoFi's lending business. We even heard the CEO arguing that SoFi will remain in a superior position to continue taking market share by holding its own products rates much longer and higher than its competitors. And that's why this KBW analyst is just wrong about their rationale. The KBW analyst essentially makes two assumptions, and the first one is that SoFi's management will somehow be caught off guard by the Fed decreasing interest rates. However, like we just heard from Anthony Noto, they already have a plan, and the plan would be for SoFi to continue their current rates much longer and keep them higher than their competition. Also, the KBW analyst also is assuming that SoFi's remaining businesses, apart from their lending segment, won't be able to pick up any slack if any slack were to occur. And I completely disagree with that assumption. Let's even assume that SoFi will lose out on some money in their lending segment. The great news is that they have two other revenue segments which will more than be able to pick up the slack. For instance, to quote straight from the article, on the latter, it's worth noting that the last quarter was the first time in company history that all three of SoFi's core business segments, which would be their lending segment, their technology segment, and their financial services segment, individually posted a positive quarterly contribution to their profits. We also know that SoFi's management has given us detailed conversations and responses to an interest rate increasing environment and an interest rate decreasing environment for the economy. And SoFi is going to thrive no matter what happens. We've already seen SoFi's resilience in regards to other major banks such as Signature Bank going out of business. And did this scare SoFi customers? Absolutely not. SoFi actually used this as an opportunity to steal market share away from larger banks. The CEO also said that they are strategizing the same plan that they utilized in 2018 currently to optimize return on equity. So then all of this put together, what does this mean? It means one, that the KBW analyst is wrong and that his assumptions are irrational. Secondly, it means that SoFi's management has a plan no matter what happens in the general economy, making this company extremely stable and resilient. We also know that SoFi's share price is anticipated to increase and that the company is supposed to become profitable during this quarter. We are literally days away from their earnings report, and if they bring in profitability, this would be amazing for the share price. SoFi is already positioning themselves to continue winning regardless about where interest rates go in the future or how low they go, and I suspect the current pullback in their share price won't last that long. So then this begs the question, will SoFi be able to double again in price in 2024? If you didn't know, during 2023, SoFi gained around 116%, more than doubling their share price after falling around 71% in 2022. So could they double in their share price again in 2024? Well, it depends. The banking industry is as old as currency itself, and today's banks are very different than what they were over a decade ago, which means that banks need to get with the times and the trends and become more technologically advanced as time goes on, and SoFi is the next step in banking evolution. And if you don't change with the times, then you won't be able to compete. And right now, no one can directly compete with SoFi. SoFi offers a banking experience that is unparalleled due to their technology. They provide an all-in-one inclusive app that essentially could give you anything you could possibly need in regards to finance. It shouldn't be a surprise that SoFi, through their technology, is recruiting millions and millions of members. Many people are actually including SoFi's products as a part of their financial planning, which is exactly what this company wants. Their customers are anticipated to continuously grow day after day, week after week, month after month, quarter over quarter, year over year, and this growth is accelerating. As more and more people discover SoFi, they are switching over to SoFi from traditional banks. Many people use more than one bank, but by banking with SoFi, you only need them. You don't need any other bank. SoFi has the clear edge in technological advantage here, and they are very impressive technologically, which gives them a huge competitive competitive advantage in regards to other more traditional banks. Management even noted that 67% of their revenue growth in the third quarter came from their non-lending segments, which means that even if interest rates do decrease and hurt their overall lending segment, their other non-lending segments will be able to pick up the slack. This means if interest rates drop low enough to impact negatively their lending segment, their other segments will more than be able to pick up any slack. And that's where that KBW analyst really went wrong for this company. However, we forgot to incorporate how a higher interest rate environment is actually bad for lending because it could drag on their lending business. Higher interest rates de-incentivize people from taking out loans, and lower interest rates incentivize them. So again, this is still good news for SoFi's lending business. As interest rates drop, like we previously said, that's going to attract more customers and increase the demand for their lending products. But even if that wasn't the case, we saw their financial services segment sales increase by a 142% year over year, which is astounding. And as for overall profitability, their EBITDA increased 121% over the last year, and I don't think this is going to stop anytime soon. Management even reiterated that they will post a net profit in the fourth quarter of 2023, which we are just days away from that report. And I also anticipate that they will be profitable throughout the entire year of 2024, regardless about what interest rates do in the meantime. Therefore, even if the KBW analyst was right, and if the Federal Reserve drops interest rates extremely low, this doesn't even matter because SoFi's growth is unparalleled and they will be profitable at scale during that time. So if all systems go as planned, SoFi stock could potentially double in 2024. However, I think a $12 price target for this company is more than enough, but I would love to hear your thoughts down below. Go ahead and annihilate that like button right now. Subscribe if you are new. Go ahead and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.